Meta just delivered a financial shockwave that has Wall Street buzzing, with its latest earnings report igniting a surge in investor excitement and driving its stock price to jaw-dropping new heights. The company reported a stunning 22% year-over-year revenue increase to $47.5 billion, accompanied by a profit of $18.34 billion, which translates to an earnings per share of $7.14, far above the expected $5.88. Immediately after the report, Meta's stock skyrocketed by over 11%, catapulting its market valuation by roughly $150 to $180 billion in after-hours trading and pushing the share price close to the $780 mark, a level not seen before. But it wasn't just the numbers that shocked investors. It was what Mark Zuckerberg unveiled next that truly sent ripples across the tech world. Zuckerberg emphasized Meta's unwavering commitment to artificial intelligence, not just for ads, but for building what he calls personal superintelligence, a long-term vision to reshape digital experiences. Meta's family of apps, Facebook, Instagram, WhatsApp, and Threads, continues to see healthy user growth, reaching nearly 3.48 billion daily active users, up 6% year-over-year. Ad impressions rose by 11%, and crucially, the price per ad grew by 9%, driven heavily by AI-fueled optimization that improving targeting, engagement, and conversions. This shows Meta's platform isn't just growing, it's becoming more efficient, more intelligent, and more profitable. That's part of why advertisers are pouring more money into Meta's ecosystem despite a competitive landscape. But Zuckerberg isn't stopping there. Meta's capital expenditure for the quarter hit $17 billion, and they raised their full-year guidance to between $66 billion and $72 billion, with expectations that 2026 capex could even cross $105 billion. That spend is aimed directly at building AI infrastructure. Think massive data centers, advanced silicon, and recruiting elite engineering talent. In fact, the company's new hires include several prominent names from the AI world, including leaders from Scale AI and other cutting-edge research groups, all recruited to lead Meta's newly formed Superintelligence team. It's clear Zuckerberg wants Meta to dominate AI innovation, not just follow the trends. And investors are buying into that vision. The Q3 revenue forecast is now between $47.50 and $50.5 billion, which blows past Wall Street's expectations of around $46.2 billion. But Meta isn't just focused on revenue. They also updated their expense forecast to a range of $114 to $118 billion, reflecting a 20 to 24% increase over last year, indicating that the company is aggressively reinvesting to maintain its competitive edge in AI, hardware, and global scaling. This shows Meta is betting big, and it wants the market to know it. Still, some caution is warranted. Regulatory scrutiny, especially around data privacy and competition, continues to grow. There's also the question of whether Meta's enormous capital investments will translate into tangible long-term profits, or if the company risks overbuilding infrastructure ahead of actual user needs, a classic field of dreams risk where you build it hoping the demand will come. But for now, analysts remain bullish. Several top firms have upgraded Meta's target price, with some even projecting it could reach $935 per share within the next 12 to 18 months. Meta's current valuation sits around 22x earnings, slightly above its 5-year average but still considered reasonable given the explosive growth and massive future potential. What's especially captivating is Meta's AI-driven future strategy. Beyond advertising, the company is developing tools for creators, investing in AR or VR hardware, and pushing its Llama AI models to revolutionize language translation, content generation, and even virtual world interaction. Zuckerberg's vision for a future where personal AI agents assist in real time across your devices, seamlessly translating languages or curating media, isn't just science fiction anymore. It's being built now. For investors, Meta now represents one of the most powerful growth stories in tech. With consistent revenue increases, cutting-edge AI integration, and a bold long-term plan, the company is poised to remain a dominant force across digital advertising, virtual reality, and artificial intelligence. The earnings beat wasn't just about this quarter's numbers. It was about confidence in the future, and Zuckerberg just gave Wall Street a very clear reason to believe. The stock surge reflects that belief, and while challenges remain, Meta's positioning has rarely looked stronger. If you've been watching Meta from the sidelines, now may be the time to look more closely. Not because of hype, but because the fundamentals are roaring louder than ever. Let us know what you think about this explosive growth. Are you buying into Meta's AI future, or do you see risk in their massive spending? Drop your thoughts in the comments. Hit that like button if this breakdown helped you understand what's happening behind the numbers, and don't forget to share this video with others tracking big tech. Subscribe now for more no-fluff updates on stock moves that matter, especially as earnings season continues and the AI race accelerates.